So let's have a look at the general process of filing taxes in Switzerland. In general, the first question that comes up is whether or not you have to do a tax return. So usually our clients, they relocate to Switzerland and then either get an B or an L permit. Now, with those permits, what is special compared to regular Swiss residents and citizens is that you are taxed at source in general. What that means is that taxes are withheld from your salary directly from your employer. What your employer does with that is they forward it to the tax office, and usually your tax liability is fully covered that way. Now, what is special about the situation in Switzerland is that if you exceed a certain threshold, which is 120,000 of gross income per year, then you are obligated to file a tax return additionally to these withholding tax payments that you're doing for your salary. Now, there can be other factors, so there are even cases where you have to do a tax return even if you're not above that 120,000 income threshold. These factors are usually substantial wealth or secondary income sources. So what that means is, for example, if you have a low income salary, but you have investments or just movable assets or properties that exceed a certain amount in value, that amount depends on the canton. Because there is a wealth tax in Switzerland, it requires you to be proactive, contact the tax office and make sure you can submit a tax return. The reason why you have to be proactive in these cases is that the withholding tax process is limited to your income. There is no queue for the tax office if you are not proactive about your obligation to file a tax return in order to capture your wealth for taxation. Let's first look at the regular case. So let's say you arrive in Switzerland, you start working for your Swiss employer, you have your withholding tax deducted from your salary, right? And at some point you read or hear something about the tax return, but you have not received anything from the tax office. So the reason for this is that it takes a while until the tax office notices that you have to file a tax return. Your employer transfers the withholding tax money to the withholding tax department of the cantonal tax office. But usually the municipality or city tax office has the task to send you the tax forms and initiate the process of the regular tax return filing, right? So especially in the first year, so let's say you arrive in, or you have arrived in 2022, whatever, July, right? And by now you haven't received the tax forms. Maybe I've heard from my colleagues that they did receive the tax forms already. So you're wondering why you haven't. As mentioned before, there's a whole process in the background from the tax office. And especially in the first year, so the first time when the trigger must happen in order to kick off the process, there can be delays. Especially in busier cantons like Zurich, for example, it can really help if you just give the tax office a quick call and tell them, hey, I will be, or I was above the 120,000 threshold. I need to file a tax return. I haven't received the forms yet. Could you please speed things up and send me the forms? And they will, right? So it can really help to avoid any major delays. We have seen cases in the past where somehow it got off the radar of the tax office. The tax subject wasn't aware about the filing obligation. And like 3 years later, they received a letter saying, hey, you have to file tax returns for the past 3 years, right? So that's something you usually want to avoid. And just being aware about this friction in the process in the first year can really help you because you know what to do. Quick call to the tax office and things will get up to speed. Now, let's talk a little bit about what it means when you have to file a tax return, right? Because you are paying source taxes after all at your salary. In general, the taxes you pay at source are final. What that means is that you have covered your tax liability for that tax year. Now, if you have to file a tax return, the nature of the source taxation changes. It will no longer be final, but only provisional. So you can treat it as a prepayment. And this is also how it is treated from the tax office perspective. What that means is you pay source taxes throughout the year. In the following year, you file your tax return for the previous year in which you have paid source taxes. Then, once the tax office has assessed the case, you will get a final assessment and an invoice, and you will see how much of the actual tax liability that has been determined in the tax return and assessment process you have already covered with your source tax payments. Now, depending on various factors, you can end up with a refund in your favor, or you could end up with an open tax liability. That really depends on various factors. The reason for this is that the source tax works with certain tariffs, and these tariffs are based on rough monthly salary factors, right? So how high is the salary? What is your marital status? Do you have children? If yes, how many? Are you part of the church or not, right? So basically that's it. But in the tax return, everything is captured in great detail. So what type of expenses did you have for your work? Did you have any training costs? Did you have other income sources, right? So all these things. And this is why it is absolutely natural that you end up with a difference between what you have paid already in the source tax and what the final tax liability will be determined by the subsequent assessment process of filing a tax return and having the assessment. So even if you file your tax return and a few months later you get the assessment and you see, okay, there is a open tax liability of whatever, 3,000, 5,000, 200, it doesn't mean that you did something wrong. It can be just based on certain circumstances. So for example, if you live in Zurich and Zurich City, which has an above cantonal average tax rate, that alone contributes to a gap between what you have paid and what you should pay. On the other hand, if you live in a tax-friendly municipality of a certain canton, it increases the chance that you get a refund, among other factors. So it's not really a good indicator to tell you whether you do things right or wrong, but it gives you valuable insight into your situation and what exactly drives your tax liability in your specific case. So let's have a look at this on a visual we have on our website. So here you can see your salary, right? It has you get the net salary, but out of that net salary, a certain portion is the source tax that is deducted. Now, again, if your income is above 120,000, what it leads to is that you are in the subsequent assessment process, how it would translate to. So as you can see, this entire portion here, this is optional and only applicable if you meet any of the requirements that would obligate you to file a subsequent tax return. So let's have a look again at the entire process and the steps if you have a B permit and if you are obligated to file a tax return. So basically, during the year, your salary gets taxed at source, right? And in the following year, so here we have year 1, right? And here we have year 2. So in the following year, you will be asked by the tax office to submit a tax return. And this is what we have summarized here as the ordinary assessment. We called it this because it's not only the tax return that you will have to do, but the tax office will do an assessment and send that to you once it is ready, which is absolutely part of the process. You need to know about it. Because the tax return that you submit, it has provisional nature, right? So it's not final, and only once the tax office has conducted their assessment, you will actually know how much taxes you will be paying. Of course, there's more to the whole matter of assessments and objections and things like that, but for now we just focus on the process. In this ordinary assessment, right, we have the tax return and we have the assessment. So once that's done, you get the final invoice, which you can see here. That final invoice, as I've previously mentioned, will determine the outcome and show you whether or not you end up with a refund or an open tax liability. So they will send you, for example, if there's an open tax liability, you will get an invoice. Once you pay the invoice, your tax liability is covered for the full year. This can be seen here, right? So the result of the final invoice is either an open tax liability, so they would include an invoice that you can pay within 30 days usually, or they have a refund. If you end up with a refund, then they either transfer it to one of your bank accounts. You can specify that in the tax return, or they ask you separately, or they will take it over to the next tax year, right? So you would start the next tax year already with a balance. That's a process for source taxed individuals in Switzerland that have to do a subsequent tax return and go through the assessment process. Now let's have a look how this compares to paying taxes if you're not taxed at source, which would apply to, for example, Swiss citizens, C permit holders, or BRL permit holders, depending on their marital status and the migration status of their spouses. So they start with a net salary that has no element of income tax deducted, right? So here, let's say we have 100 salary here and 100 salary here, net salary, not gross. Here, the net salary is equal to the paid out amount, which is 100. Here, even though the net salary is 100, the paid out amount is not the same, right? So for example, you have a deduction of 20 for the withholding tax. So the paid out amount is actually 80. The net salary is still the same. So your let's say the taxable salary is, or let's say the basis for your taxable income starts with the same net salary. It's 100 in each case. It's just a payment modality that is different, right? So that's really important to know. And what that means, and this is really essential, what that means is that you don't pay, like if you are in the subsequent assessment process where you file a tax return, etc., you're taxed based on the same principles in terms of how much you tax than someone who has not tax at source payments, right? Because again, if you are in the subsequent assessment process and you are taxed at source, the nature of the source taxes is provisional and it functions as provisional payments. So it does not change. So if you change from a B permit to a C permit, that alone has not an impact on how much taxes you pay, all in all. If before the switch to the C permit, you have done tax returns and received assessments already, right? That's really important to understand. Now, the question is, how do tax subjects that do not pay source taxes pay their taxes? So the process is a little bit different, right? Instead of having taxes withheld from your salary, you're actually invited by the tax office to make provisional payments throughout the tax year. So you can see this here with the provisional invoices. What that means is at the beginning of a corresponding tax year, you get a letter from the tax office. Maybe there are four pay slips with certain amounts based on assumptions, and you can pay them throughout the year. The idea of that is that by the end of the tax year, that you have more or less your tax liability covered. Now, the tricky thing is the timing, right? By the time you do these payments, you haven't done the tax return yet because that's in the following year. And the tax return and the following assessment only determine how much you will pay. And this is why these provisional invoices are just based on assumptions, right? Usually the tax office takes the numbers from the previous years and applies them again. And usually that's a good indicator. Now, should that be really off, then you always have the possibility to contact the tax office and tell them, hey, invoice me for this or that amount. And then they will send adjusted invoices. But back to the process. So you pay provisional invoices during the year. In the following year, right, you pay the tax return again. So tax return plus assessment. And here you can see nothing changes. So this is equal to this process, where you also do the tax return and the assessment. So that's the same, right? What is different is just how you have paid your provisional taxes in the actual tax year. It is worth mentioning that when you pay tax at source, your employer is actually is the one that has to apply the proper tariff and therefore has to take care of the administration. So for you as an individual and the tax subject, it is actually more convenient to be in this process, right, rather than this one. Because here, if the tax office sends you invoices that do not really correlate with your situation and you want them adjusted, it needs action from your side. As with this situation, when you are source taxed, you don't have that. Your employer just has to apply the proper tariff, and more or less it usually covers your tax liability. So let's get back to the process here. So as you can see, as of this point, or actually as of this point, the process is the same. So even with a C permit, no source tax payments, you file a tax return, you get the assessment, and then you have the final invoice. Same thing here. If you paid too much, you get a refund. If there's an open tax liability, you get an invoice. All in all, once you get the assessment, you have the final invoice, you pay, and then you can conclude your tax year. And this is really what you need to understand about the process if you relocate to Switzerland. You're wondering what applies to you and what it means to file a tax return.